Hey, it's Mike with PriceActionTradingSystem.com, and it's Tuesday. It's October 8th. This will be our chart lesson for the day. And interesting day. We had a big move down that really uh, about 30 minutes after the opening kind of found some support here. We bounced a little bit, then we sold off, and eventually went lower before the day was over. So really, most of the day we spent just kind of meandering around. I would call this an uptrend. You can see the EMA turned up here, and we had what looks like a two-tiered channel working up. We had a big overshoot here and all before we reversed. And I mean, there's nothing real strong about this reversal, but I think we were just oversold. Prices bounced a little bit before selling on off. Um, Most of your trades were earlier in the day again. There were a few this afternoon, not a lot. There were plenty of them early in the day trying to get short here. What you would expect here, notice that we had a two-tiered channel working down. Of course, there's shorter term micro trends inside of the two-tiered channel, but we kind of got outside of it right here, and we went into this flatter brown channel. It's still not really a 45-degree angle, but you can't deny that this brown channel's here, and it plays out, and we kind of meander around here sideways before kind of bouncing. But anyway, let's back out and we'll talk about the trades. And I'm going to talk about higher lows, or yeah, actually, let me back up. Lower highs and higher lows. I want to make sure I say that right, because sometimes I get to talking fast and I'll get them backwards. But when I get to this trade, I'll start that. I'm going to go ahead and start the trades, and then we'll talk about this. But this is pretty important, so make sure you pay attention. Actually, I could probably start talking about it right here. When I came in, 7 o'clock came right in this little move down here. And you notice I finally marked a little short right here. But let me explain this to you. Notice this is a trend working up. You got to be careful going short until this trend plays out. So what do you need to know that this trend's played out? First, you'd like to see a break of the trend line, followed by a new high, and then a lower high. That's a good sign that, hey, the market's probably changing, because a downtrend is lower highs and lower lows. So the first thing you got to get to prove that it's reversed is a lower high. And then you get a lower low, and then you get another lower high right there. And so that's the idea behind lower highs. And you just flip-flop that if you're coming off the lows. You look for higher lows. And so you want an uptrend, or let's just say a downtrend right now. When you're in a downtrend, generally the market is making lower highs and lower lows consistently. Notice this: lower high, lower low, lower high, lower low. We made a little two-legged correction right there, but it's still a lower high, lower low, lower high, lower low, lower high. That's a downtrend. And when it starts making higher highs and higher lows here, you got an uptrend. It's just a temporary one, but you still have to let it play out. So the best way to do that, it doesn't always work out perfectly, but what you would hope is that you get a break of that trend line, or a convincing close outside is what it really is, followed by a new high. Well, we don't know that that's the final new high, do we? No. So what we want to do is wait on a lower high, which came right here. And then you actually got another lower high right here. It's only by one tick. There's a couple ticks here and maybe one tick here. I'm going to make this a little bigger so it's easier to see. But in order to get a lower high, you have to get a break higher. So in other words, I had another trader. He thought that this was a lower high right here because the bar made a lower. We're not talking about bars, we're talking about swings. And so in order to get a lower high after this high, you got to make a correction that goes higher. And you see that broke higher. So now if we go lower again, that's a lower high. And no, you don't know that's a lower high until it breaks lower right there. But guess what? If you're anticipating that we're going to turn back down at some point, this is playing out over here, then when this finishes, you can put a sell stop one tick below that bar right there. And when it breaks lower, that's a lower high. Even if it goes higher again right here, that's still a lower high, because the market made a lower low right here. And so we come back and we make one tick higher. If we break lower there again, that's still a lower high. Even if we don't, if we go higher and higher, eventually when it breaks lower, it's a lower high unless it gets higher than that high. If this bar right here on this correction would have went higher, or if we made several bars and it went higher, then suddenly it's a higher high. So you got to understand the basics of this really before you start to get the lower highs and lower lows. And the whole idea behind it is you want proof that the market's going lower again. So keep that in mind. So right here, you really could have gone short right here. And that's really a second entry short too. Actually, it's not because we didn't make a new swing low here. So there's a first entry short, second entry short, third entry short. And when it went lower, that would be a fourth entry short. So we don't make a new swing low until here. So that's when the count starts over. So hopefully that makes sense. But anyway, I don't want to confuse you with all that. Right now we're talking about lower highs. So notice we got the trend line working up. What we want to see is a break and a new high followed by a lower high. Well, there's your lower high right there. You could have gone short right there. I didn't like this one because we're really kind of just out here in nowhere land. We're above the EMA. You got those 2-bar matching lows, which a lot of times, you know, if this one would have broke higher and turned and went out the other side, I would have said go short right there. But the fact that it ended kind of neutral to almost bullish with a 2-bar matching low, I think we needed more proof that we were going lower. So then you try to go higher again. Now you got a failed second entry long because notice that new high, pull back first entry, pull back second entry. Well, that's a failed, if it breaks lower right here, that's a failed second entry short. And the way you trade this is you anticipate that, hey, maybe we got a trap here. Put your sell stop. As soon as that bar closes, put your sell stop one tick below it. And if it breaks lower, you're triggered into the trade and you got a failed second entry long. If it doesn't trigger and it keeps going high, just delete, you cancel your order and you start over again. So I had a trader try to tell me today that you don't know that it's a lower high until prices are way lower. No, you don't. You anticipate what's going to happen. And you know it's a lower high as soon as it breaks lower. As soon as it breaks one tick below that bar, you got a lower high. That's all you need. And you don't have to know that you're going to get it for sure. You anticipate it. When you do this long enough, you start to learn what prices are telling you. Learn to anticipate this stuff. Sometimes you get it wrong, yeah, but you just you just cancel your order and you move on. So anyway, I hope that's clear. So I like this one because not only is this a lower high, a second lower high, it's a failed second entry long. So now we're making lower highs and lower lows, and another lower high, another lower low. So now we're trending back in the other direction. So I hope that makes sense. But notice we make a new low, and then you come up, you get a first entry. You come up here and you get a second entry short right here. But this is really your signal bar. This is just an inside bar. It's too bullish. And then we come back up here and we turn down again. But again, this is your signal bar. And you could really look at this as a first entry. And you could even treat this like a second entry almost if you wanted to. It's a multiple test, but it's just too bullish a bar. Yeah, you get this other bearish bar, but this is really your signal bar. And so you're better off to skip that trade. And now you're trading down here. And here we go. We got the same play all over again. We got a trend line working up. And notice this right here. This is a lower high than right here. But guess what? This trend line isn't played out. So what you want to see is a lower high off this mark right here. I marked this one green because that's a pretty strong trend down. And now this does confirm that trend line, and that's a bearish bar. You may take that trade. It's not a perfect setup, though, because you still got this trend line working up. And you could get that close outside and another push higher, which we get right here. You don't get a setup again, though, unfortunately. But you might take this trade because there's multiple reasons. Even though this trend line is still in play here, this is a very bearish bar. It's a pullback to test the breakout on this little sideways stuff. So you've got multiple resistance areas. You got the EMA. You've got the trend line, which you just confirmed. You've got the support resistance that now is acting as resistance. That's 3 different reasons to like that trade. So I marked it green. You could almost mark this one red, but understand the difference between what we did here and what we did over here. We waited for the lower high. Here, if you waited, you got one right here. You never got your higher high first, but that's because the bigger pattern's taking over. So if you'd got a good setup right here, I'd say go short. And actually, as bearish as that is, you might let prices break lower here and drop a limit order back one tick below this one and see if it comes back and fills you, and then try to get in. But I'd probably just skip that trade. If you weren't in here, you'll probably get another opportunity. Guess what? You get a failed second entry long there, but now you're going short into the very low of the day. You're still not a great place. So just wait and see what happens. And then finally we come back here and we actually break higher. It didn't quite get back to the trend line, but then it turns and goes out the other side. I like entering there. And this is a good example of what happens if you don't have enough room. Notice how we bounced to the tick right there. But you still got enough. The entry was one tick below this bar, so you still got just enough to scalp out. And that's another reason why we scalp for 4 ticks, because we can get that more times than not if we're following the rules for the most part. So, and this is actually a failed second entry long because you got a double top right here. So first entry, there's actually 2 measured legs down, and so that's a failed second entry long. But if you'd waited for this bar and went short right there, you don't have enough room and you can't take that trade. So the only way you could enter that one was if you, when it broke higher and turned back down, you went short one tick below that bar. And you see what happened. It would have stopped you out if you did it any other way. But notice you got a little double bottom there now, and you broke lower once. And really, I would just count this as a new low, and there's even a second hidden second entry right here. But either way, again, we're going sideways. This is a little failed breakout that comes back and confirms the trend line, turns down off the EMA, gives you a big bearish bar. I like entering short right there. And it comes back here and gives you a lower high, but not a very good signal bar, not any room left. But then it gives you another failed second entry long right off the EMA, right off the trend line, and again, right off this lower support, we close below it. That's a great place to enter. It takes it a minute, but it drops on down. There's a second entry short right here. I don't like it by that time because you're going sideways too much, and that's basically a doji. So you got 3 or more bars with one of them being a doji. That's congestion, and so that's a little risky there. If I didn't enter here, I probably wouldn't enter here. You drop on down, you come back again, and once again, you could argue for this to be a failed second entry long. It's a big bearish bar too, but you did get a close outside this brown trend line. You've already had a close outside the bigger pattern, and you've got at least a couple of swings down to a new low. So it's getting dangerous going short here, especially with no room to scalp out. You could probably argue for that to be green. Technically, that's actually, let me back up a little bit. Technically, that's not a failed second entry long because we never got a new high down through here. You could kind of look at it like one because we came back to the trend line and tried to go higher twice, but that's just scratch that. I said that's a failed second entry long because it's not. You could treat it like one. It's, you know, it looks like one. It's probably going to act like one, which it does, but technically it's not one. So sometimes I forget and say little things like that, and I don't explain it, but I'm glad I thought about it that time because it does confuse some guys that are newer and don't understand what we're doing. You got another lower high right here. I mean, there's your higher high, so every single one of these are lower highs. But you don't want to be getting short way down here without a good reason. And you do have enough room to scalp out here. Problem is you're not quite back to the EMA, not quite back to the trend line. This actually broke higher, came down here and made. You could argue for that one to be green. I didn't mark it, but you could argue for that one to be green. It's just a first entry, so you know you're almost always better off. But this market's weak, and once you start to get weak, and every time you come back to the trend line, if you don't have enough room, you may not get a second entry. But notice you actually do get a second entry short right here. Or actually, it's right here. Notice that new low, first entry, second entry. And but look at all that and all that support. You don't have any room. Horrible signal bar, and so you don't go short there. And look what happens, it bounces. That's why you don't go short. There's actually a double test. Notice you made that low. You come back and test it once. You test it twice. You're a little bit away from the EMA, and you have had a break, but I would want to wait on a higher low here, which you actually get right here. Only problem, and another thing that makes you kind of think about going long right there, is that that's the first break of this trend line. Only problem is there's not a lot of room back to that high, and it could run up there and make a double top and turn down. We just don't have enough evidence yet that it's time to go long. You want to see a true reversal pattern, and that's not how they look. It's still been very bearish, and that's the first time we've really closed above the EMA. Look how long we've been closing below the EMA. Usually you're going to close above that EMA a few times before you actually start going higher. So if anything, you're probably still looking for shorts here. So you finally get two legs up, but notice what's happened. Same thing I showed you on the other two corrections. You're coming up, you get a close outside a new high. So now if you had a really good signal bar on a second entry, I'd probably say go short if you're way away from the EMA. But now you probably want to wait on at least a lower high, which comes right here, and that's relatively bearish. I like entering there. Quick scalp, but it comes back again, and it just makes a double top and tests that area again and gives you another bearish bar. But notice that's a second entry long. That's technically not a failure, but you can treat it like one because this has been a big downtrend. I like entering short there. Another big move down. It bounces here. Notice you got a low. You've tested it. You've actually tested it multiple times, but I'd look at that as at least two tests, coming back and testing that again. A little bit away from the EMA, so you got some support there. It looks like we're kind of going in a range. You might take that long. It's being aggressive, but we talk about that a lot. A lot of times you catch these and they're important lows, which that does turn out to be, although I doubt you're going to ride this turn back down off this high out. I mean, when we turn back down here, I'm looking at this like a range. You don't know that you're going to get this next move up. You get it, but you don't know that ahead of time. So you'd be exiting this. And then we're just kind of working down. There's not really a good setup to go short here. And here's a good example of what happens if you're not paying attention. You get a lower high here, but look at all those matching lows. And so there's a reason why we keep bouncing right there. So the next thing you know, you put a sell stop there, try to call that a lower high, and it goes a couple ticks and bounces. So you want to have some room there, not three matching lows. This looks like a trap right here, and you might consider going long, but with everything still being below the EMA, there's too big a chance it turns up and turns back down. So again, there's just no trades here. These are the ones that, they're not great setups. There's reasons to like them, but they're not great setups, so just skip them. Yeah, you got to watch it take off without you, but that's better than making a mistake and having a loser. Just wait a few minutes and another trade comes along. And here we go. Let me show you this. You got this trend line moving up. You get a close outside. There's your new high. You try to go higher again and make a double top. There's your lower high. Look how far away you are from the EMA. Look how bearish that bar is. That's where you want to go short. And boom. It actually comes back again and makes another double test of this level and gives you another big bearish bar. I'd enter that thing again, and you get two quick scalps there if you want them. And now it bounces. Notice how you made a higher low here from this one. That's tempting to ride it back up here, but I didn't mark that one. Again, it went lower and turned up. You don't have a lot of room back to here, and we've turned down every time. Just kind of wait. See if you don't get a failed breakout or something better. And guess what? It comes up here and it gives you a failed breakout. And notice that low. That's a new low. It's lower than that one. First entry. Second entry. That's a second entry long. The only thing I do not like about this one is that is a huge signal bar. But remember what I tell you about those breakouts. Those failures, they turn out to be important highs. This turned out to be an important high. And you could look how quick and easy that one trade would have been all the way down. And that was an important high. It didn't turn out to continue another trend down, but just that one trade is a huge move. I mean, that's from 285 to 2906 or so. that's a nice move right there. So anyway, if you can catch that, that's a big signal bar. So what you might do is try to get in there with a limit order inside 2 points. And I'm not sure how much higher you could have got filled on this, but you could get real close if you didn't want to take it here. What I'd probably do on that big a signal bar, and when we've been in a big downtrend, is I may go ahead and take it here and put my stop where it goes. But what I would do is I would add the difference on. If I had to add an extra 4 ticks, and I'm going to try to scalp an extra 4 ticks. That's how you would do that. You don't want to do that a lot, but once you get experienced at this, you don't want to pass up good trades like this just because the signal bar is too big. And that'll happen, especially when it gets real volatile. You'll get a lot of that. But anyway, you're coming down and you get a lower high here again, but look at all that congestion. You draw your trend line, let's just see what happens. And you come down here and guess what? You get a failed break out the low. Look at all that support across there. And you fail. There's your higher low. It actually makes a little 2-bar matching low and turns and goes out the other side. I'd probably wait till this finished. And what I might do is let it break higher and drop a limit order back, maybe a tick or two above that. You don't have a whole lot of room if you wait till way up here. I'd at least try to get a little better entry where I got enough room to scalp out. It may be close there, and it still probably would have worked, but I'd want to sneak a little better entry, and that's why I marked that green, because it's not a perfect signal bar. If it would have broke lower first and then turned and went out, you could have went long 1 tick above the red bar. But it didn't do that. It made a 2-bar matching low right there. But again, that's that failed break lower. And if you're really experienced at this and you can see those 2 legs down and you know that's a failed break lower, you might even try to enter right there. That's what I'm going to want to do. But the better move is to wait on the higher low. But sometimes you don't get a higher low. So you run up to the EMA and you don't get through it. And you're just struggling right here. So you don't really want to enter. Actually, notice what happens. You finally make a lower high right there, or lower low. It's lower than that low, so the count starts over right here. So you get a first entry, a second entry, it fails. Everything's above the EMA. You get a double test of the EMA. You confirm that trend line. Got a nice perfect bullish bar. It closes on its very high. Go long 1 tick above that. And there's your best trade to try to catch this. And you can ride this all the way up. There's actually another higher low right there, because it's higher than this low. And it ticks back, and this actually breaks lower and goes out the other side. I don't like that one as much because you're going long right into this little double top right here, although that trap will probably propel you on through. I think the safest place to enter was here, and I'd probably skip these other trades. And if you enter here, you can participate in that if you're trying for a runner, which I would be trying to catch these lows down here. And look at it go. And now here we are working in the other direction. Let's talk about higher lows. Notice we're coming down. You finally get a close outside and a new low, and you don't get a higher low till right here. And it's right off that main trend line again. So I like going long right there. It's just the first entry if you're counting off the highs. But we're looking for the reversal here in the higher low, and that's it. And at the very least, hopefully you get a measured leg like that. We don't end up getting that, but you get an easy scalp. And here we are. We're coming back again. Finally get a close outside. There's your higher low still. And really what you want to do is take this trend line and drop it down in case this was in case this continues to go up. You really don't know that here. You're just looking for the equal distance stuff at this point. But it continues to climb up this trend line, so then you got to assume, hey, maybe this is a 2-tiered channel right here. But there's your higher low. I like that one. It didn't take off right away, but it would have worked. And then you come back again, and notice you made a little push lower right there. So really you've got a first entry. I wouldn't really count that as a second entry. I would count this as your second entry. There's 1 tick lower right there, but that's just kind of going sideways. That don't mean anything really. So look at your low, first entry, And then so there's a leg up, and you kind of go sideways, you get another leg up. So that's technically your better second entry on a bigger picture or whatever, however you want to look at it. And when it broke higher right there, you could treat that as a failure. So and look how that's just right inside that trend line, right above the EMA. Look how bullish that bar, for a bar to open here and trade all the way down and then come back up and close 2 ticks higher on its very high. That takes a lot of buying. There's a lot of buying coming in there. Go long right there. There's another higher low right here and a second entry long to boot, but that's right into all that resistance. It's not a very, this is really your signal bar, not a good signal bar. Some reasons not to like that one. But this is a double bottom too here. So first entry short, and that's a second entry short. It fails and bounces another bullish bar. I like going long there again. It's not perfect because we don't get back to the EMA. I'm sorry, back to the trend line. We only bounce off the EMA. So, but again, it's 2 legs up that fails. So, and you got enough room to get out, and look how it runs up. And suddenly it gets up here and it just turns down and the bottom falls out of it. No way to really catch that. You might go short right there, but look, anytime you start trying to pick tops, you're probably going to get burned. So it's not worth it, and you don't get a lower high or anything to enter until way down here, and you can't go short down here. Because this is what happens. It bounces on you and goes the other way. You're still really looking for a short. It's really tempting to go short right there, but if you drew this trend line, you're living on the edge going short yet until this plays out, and it may turn down and go straight down because that's a fairly bearish move down, but you just can't risk it, not at 2 o'clock in the afternoon when you're about to say, hey, I don't take any trades after this. So if anything, you might have considered going long right there, but when it turns down again and turns back up, I guarantee you trap people. You might go long right there. It's just right at 2 o'clock. I didn't mark it, but if I was going to enter, that would be the one, because that's a quick, easy move, because you got a trap right there, and it still turned down in the end, but that trap was enough to, all they did was trap a bunch of longs in and take it back down again. They were having a hard time selling this thing off. So anyway, I hope that was helpful to everybody today, especially the gentleman that's been having a hard time trying to understand lower highs and higher lows. I mean, that should help you tremendously, I would hope. So anyway, I'm going to wrap it up. I'm ready to get out of here. It's late in the afternoon. I want to get this uploaded, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.